Hello and welcome to today's video. And in this episode, I'm going to discuss on TCS result analysis. In the last video, we discussed on Infosys Q4 FY24 result analysis and also full year FY24 result analysis. I'm going to do the same for TCS. Let's have a quick look. But before that, let me mention here that I'm going to create a series of result analysis, and like I'll try to cover up most of the like as much as possible number of companies, and also it will not be only important result analysis, but simultaneously I will discuss on the what the management has said, what is the way forward. That is very important at the end of FY24. We are looking forward in FY25. New government is going to swear in today, so very important time, and that's why like the business environment and the way forward, the market forward is very important for all of us. Okay, I have already shared my screen, and I'm going to show you TCS result. So TCS, I would say, bit different from rest of the pack. The entire pack, we have seen lots of weaknesses, some negative constant currency growth for many of the companies, but TCS is different. TCS posted a very handsome positive numbers, although growth has been tapered for last few quarters, last especially 3 quarters. So let's have a close look. This is the quarterly result of TCS. I can make it even a bit larger with zoom. Okay, I hope my screen is visible to all of you. So March quarter, TCS posted 3.5% growth year-on-year basis. But if you check constant currency numbers, then TCS constant currency growth in Q4 FY24 stood 2.2%. Very important is last year same quarter is it was 10.7%. So we are where like we are very much acquainted to see double digit, high mid double digit growth uh, in this type of companies. Like TCS in June 22, you can clearly see here, posted 15.5% constant currency growth year on year basis. September 15.4, December 13.5. Now it has started squeezing from December 22. Then 10.7, June 7%, September straightway come down to 2.8%, December 1.7%, and March marginally recovered sequentially, but overall weakness is very much visible. And last, especially 4 quarters, we are seeing single digit growth, and last 3 quarters it is low single digit. So very important for us how the recovery process is. Okay, so let's get into the line items. So very important is the operating margin. TCS posted, despite everything, TCS posted 26% operating margin in March 24 quarter versus 24.5% margin, operating margin in March 23 quarter. So there is a clear cut 1.5% improvement in the operating margin despite challenges in the business environment. This is very positive and different from many other companies in the same sector. We have seen what Infosys did. Infosys maintained its operating margin, but there was no growth. It was under pressure. It said about 20 to 22%. Management constantly said 20 to 22%. For every quarter they come out, they said it will be 20 to 22% exit FY24. Finally, they delivered same within 20 to 22%. It was less than 21% rather. So anyways, here Tata consultancy has shown a different, altogether different result. Despite pressure in the top line, the company posted very good operating margin. So this is very important. Okay. Let's have a close look at the. I'm not going getting into those EBITDA margin, EBITDA bottom line. All those are not that important. Our operating margin and the top line is very important. You can have a very close look at the entire result once again. Uh, Now, okay, full year FY24 was 3.4% constant currency growth versus 13.7% in FY23. So this was the number. Now we will get into the segmental performance. Just very closely have a look at the segments. BFSI, the biggest contributor to the top line of this company, they posted 1% growth, means almost flat year on year basis. Very important is last 3 quarters, the numbers are in single digit growth in the BFSI segment is single digit, and last 2 quarters it is low single digit, 2% and 1% respectively in December 23 and March 24 quarter. uh, Manufacturing 11% growth year on year basis, uh, and retail and consumer business also started squeezing out, so it was almost flat in this quarter. Communication media has started recovering a little bit after some weakness in June and September quarter. December quarter was marginally improved at positive growth, and this quarter it is still better, 6% year on year basis. Life sciences vertical has also recovered a little bit after the weakness in June and September quarter. So altogether, last 3 quarters are not good in terms of segments, various verticals of the company. Although some recovery we have seen in retail consumer space and life sciences spaces for December and March, but we have to see whether this growth is sustainable and whether the company can manage to get some expanded growth. We will discuss on what the management said in the next video. So very quickly, if we ran into the segment contribution, we will be able to see that 37% is the contribution of the banking and the financial services. However, one very good sign is that despite pressure in the banking and financial services domain, margin has improved, which helped operating margin also to expand 150 basis point year on year basis. So March quarter, the banking and financial services and insurance sector margins stood at 28% in March quarter versus 26% last year same quarter. So 200 basis point straightway improvement is visible. Manufacturing, we have seen some volatility, some one-off I would not say, it's some order dispatch which helped some improvement in the manufacturing margin, uh, and communication has started showing some sustainability, like after some like couple of quarters, weak couple of quarters, but important is sustainability here. Communication is very much visible, or let's say better visible from Tech Mahindra, who has the largest communication is the largest vertical for them, but BFSI is largest for TCS and uh, Infosys, obviously, and also for Wipro. But Tech Mahindra is gradually changing stance and reducing their weightage in this core segment of communication and gradually increasing their weightage in the BFSI segment. So this I will be discussing during the management's uh, like whatever happened in the management call, whatever the management has cited. So anyways, this is I think all. So if I make a summary of it, then yes, there is weakness in the numbers, but overall it is not that like problematic. It does not seem very problematic, like many other IT measures, where we have seen constant currency degrowth. But this time, but for TCS, it is absolutely different. Obviously, top line growth rate has been squeezed, but they somehow manage to maintain a positive growth, some sort of growth, and there are expansion in the margin. Similar thing happened in the VFSI segment. Vertical wise, no major weakness, like whatever weakness that is prevailing, and some sort of means I would say some silver lining is there in terms of improvement in the margin, especially in the VFSI sector. So we'll discuss in the next video regarding what the management said in TCS. Thank you, and please don't forget to subscribe my channel. Thank you so much.